Hello kind people of YouTube and welcome back to another video. Today we have had another relatively unremarkable day in the crypto markets, but we have had a few pieces of interesting news and of course the market movements themselves that I am going to talk you through right now. Anyway, as always, let's start by refreshing CoinMarketCap right here. We see another day with very little movement. The market cap of the crypto markets remains at 202 billion, just about the exact same level it has been for 2 or 3 days now, after it crashed down about 10% from one day to the next, the same day that the traditional stock markets lost some of their value. But aside from that, today we don't see a lot of movement. Here you see most tokens moving less than 1% up or down. The biggest movers in the top 10 here are Cardano down 1.7% and Ethereum up 1.1%. Incredibly little movement here. With that comes a drop in volume. We see Bitcoin down at 3.1 billion 24-hour volume again. We just saw it between 4 and 5 for a couple days again, but it is dropping. Again. In general, volume for the entire market is just under 10 billion right now. That is very, very low. Bitcoin dominates 53.8%, also just about the same level it has been for a couple days. We don't see an awful lot of movement either way if we're looking at the very short term here. Very much sideways movement. Now, of course, on the weekends we do usually see less movement and definitely also less volume. So some of that is definitely down to just it being a weekend. But it still seems like everybody is just waiting for the markets to get moving. There's very little money flowing either in or out of the markets. Everyone is just waiting. And we have another very narrow range here again, which once again points at a chance of a price breakout either up or down in the near future. When we see the prices barely move for too long, when we see them get very, very narrow, that usually means a large change is about to come. But I'm not a technical analyst, so don't listen to me too much here. We do have, and that will be the biggest part of today's video, I have an interesting opinion piece from CCN that I want to read with you guys about where the Bitcoin price might go. And it's a very long piece, but I think it makes very many good points and some stuff for us to discuss will be in there. So bear with me. If you can always skip past it and just go to the actual news articles. The news are happening after that analysis. But let's start from CCN. It says here posted 1 minute ago, but it always says that for me. It was posted about an hour ago, I think. All the links to the articles, of course, in the description. But this is a long one, so let's just read it. And I'll try not to editorialize too much while reading it. The air feels different during the autumn, which is around the corner here in the northern hemisphere. I must admit I really enjoy walking down the street when it's covered in colorful leaves. Can't really say why, but it has always been one of those guilty pleasures of mine. Now more than ever, due to the crypto market seasonality, I've become passionate about this period. For the Bitcoin, bull season is about to begin. I'm talking of course here about traditionally bull season being in winter. Prices don't lie, and from experience, Bitcoin usually doesn't stay this stable for such long periods. At the time of writing, Bitcoin is still below the $7,000 levels. Nonetheless, if we take into account the contrarian rule for investing, as well as the dynamics of volume and volatility when aligned to a spike in general people's interest, we may be able to predict a significant rise in Bitcoin price. The absolute truth is that we haven't seen such low volatility in Bitcoin since last year, just before the most epic bull run in history began. Plus, I can't deny my guts. There's definitely something peculiar in the air. Is it the smell of fresh cake? Could it be a false sense of hope as some predicted we haven't reached the bottom? Whatever happens, the next couple of weeks will make waves that will ripple throughout 2018. I feel like they might mean 2019 here. Something big is coming, and I feel it's now time to play your cards. And the important thing here, article not financial advisement, it's a personal opinion, but it does go pretty deep and it does present a variety of articles, so I'm going to read it out today. Marty Greenspan, senior market analyst at eToro, just shared with us an amazing piece from The Economist released in 1988, discussing the need for alternative sound money-like currencies detached from governments and political ruling. The title was spectacular for its publishing time. Get ready for a world currency. Sadly, it seems most 21st century economists have put that idea into the let's forget about that bucket. However, as of 2009, Satoshi Nakamoto made sure we could all benefit from a proper peer-to-peer digital permissionless world currency, limited by mathematical parameters which give it sound money-like properties, and today here we are again discussing when its value should skyrocket, like that is an absolute certainty. Logically speaking, it is not, but fundamentally, how can it not be? The value of Bitcoin is entangled to its massive store of value properties. As explained by Jimmy Song, longtime Bitcoin developer and maximalist, the fact there's a limited supply available, while it's still easy to get and store, makes Bitcoin the perfect digital asset to use as money. Now, I'm not fully behind this. I don't think there's a very strong case to make for Bitcoin over other cryptocurrencies. But I think we should read this article as being about crypto in general and not Bitcoin in particular, and then we can get a lot more value from it. However, nowadays it's super straightforward to exchange and spend Bitcoin, giving it unit of measurement properties as well. Now he's showing this image here where we can see the comparison of market size for crypto with other large things in the world. Definitely do look at the entire image closely by opening the article. You won't be able to see it as well in the video here. To me, this is a joke. Look at the value of the global financial and assets markets when compared to cryptocurrencies. If Bitcoin is now worth around 115 billion US dollars, that simply means when 10% of all wealth shifts from stocks and gold into Bitcoin, there will be about $7 to $8 trillion coming into the market. Once again, assuming here that the money is going into Bitcoin and not into the markets in general. If a couple of $1 million in volume have such an effect on the cryptocurrency market prices, can you imagine the impact a couple trillion will have? At some point we gotta ask ourselves, can Bitcoin really hit 100,000? What about a million? I honestly don't see why not. Nonetheless, can the opposite also happen? Once again here, he is talking specifically about Bitcoin. I'm not as behind Bitcoin as he is, but I think these considerations are valid when we're talking about crypto in general. We simply do not know if Bitcoin will remain the leader, and there are many good reasons why it might not, because it's simply technologically overhauled by now. But let's just talk about this as if he were talking about the entire crypto markets instead of Bitcoin in particular. There are many factors which could potentially destroy the short-term price of all cryptocurrencies, such as bans, regulatory action, and price manipulation. However, in the long run, no single entity can have such an impact on Bitcoin's price, as the more people who purchase Bitcoin, the more distributed it gets. Right now, if you hold about 0.1 Bitcoin, you are part of the top 1% who can ever own that much. That is assuming in the future everyone owns just a tiny bit of Bitcoin due to the 21 million supply upper limit. 0.1 Bitcoin becomes the necessary amount threshold to be part of the top 1% in the world. Surprising, right? Looking at the market through optimistic lenses, I truly believe sooner or later the price of Bitcoin will explode. That's what history tells us, plus in the long term I personally don't think any fiat currency will ever be able to compete with Bitcoin's sound money logic. Now once again, I personally would be talking about crypto in general here, not Bitcoin in particular. I am usually quite patient and try not to spread FUD or FOMO, however it seems the planets are aligning and we might soon experience a bull run like last year's. That alignment can be represented by a couple of historical factors which have been connected to huge bullish seasons. From seasonality to people's overall interest in cryptocurrency and powerful TA indicators, there are common grounds for a huge price swing. Let's discuss them below. And here we get to the actual meat of the article, the actual reasoning he is presenting here. And this is the interesting stuff I wanted to talk about. And we talked about a lot of this stuff on the channel before, but never all these reasons just back to back, so let's just go through them. Number one is seasonality. And here you see the graphs from the last 5 years, where we see pretty much every year except for 2014 to 2015, we saw the prices rally like crazy in the last quarter of the year, usually after either a long time with very little movement or a bear market. The core argument for most people why Bitcoin's price is about to moon is linked to the crypto market seasonality. That is, during the last quarter of the year there seems to be a sudden spike in cryptocurrency prices. It has happened a couple times in the past, like in 2013-14, 2015-16, 2016-17, and finally 2017-18. If we take into account mathematics and the theory of probability, looking at the past 5 years, that is not how you apply the theory of probability, so please don't listen to this. There's only a 20% chance Bitcoin's price won't rise. That is since he is committing a bit of a fallacy here. He is actually at least two fallacies. The first fallacy is that he is looking at the immediate past and he assumes that the future will continue following the same patterns. You can't just suppose that. And the second is that he's looking at a very small data set here. He is looking at 5 data points, and you can't extrapolate from that. So do not use 5 data points as your basis for this. Like, the theory of probability doesn't look at... You wouldn't apply it by looking at the last 5 years and assuming that you have the same chance of something happening now. You would look at the actual factors that could cause something and applying a probability to that. But he is talking about the odds we have seen from the last 5 years. That is an intriguing thing to look at. There must be reasons why 4 out of the last 5 years we have seen a spike in the end of the year, but you can't just use that to extrapolate. Should we ignore them? Is there some other factor correlated to Bitcoin's price we cannot foresee? Some randomness per se linked to the price we cannot comprehend? Well, his claim here is that it's people's interest. Now, once again, before we talk about this, you have to be careful here. You have to be careful about the what is the cause and what is the result here. The prices could have gone up because of interest, or interest could have gone up because of the prices. It is very hard to tell from graphs like this. And back to the article. One thing's for sure, the number of people looking up Bitcoin seems to be directly correlated to its price. That is, whenever Bitcoin's price goes up, people go crazy and start looking up Bitcoin on Google. There's also a trade of dumb money to become interested in an asset after the price skyrockets. What's the purpose of investing if you're already sure that you haven't caught the bottom, or at least a nice price level that lowers your risk? That's the role of smart money. Whales, financial institutions, funds and whatnot decide when the price goes up by purchasing directly in the market. If you're looking to lower your risk, try to buy Bitcoin when people's interest is at its lowest, as historically this is when prices are at their lowest levels too. If you're looking to widen your knowledge on how social media predicts Bitcoin's price, you can read this paper from 2015, linked here, which aims at answering just that. Another report from Business Insider published in late 2017 also came to the same conclusion, that prices and Google searches were highly correlated. Now once again here, correlation doesn't prove anything either way, but it is definitely a good argument to make, or rather just good general common sense advice to buy when interest and prices are low, when you believe the prices might have reached a bottom, and not after you saw prices explode, because chances are you are buying at the peak before it drops again. Number 3, technical analysis. To most of you, this is what matters. Good old price analysis, the purest form of technical analysis there is. As this is not my field of expertise, I'll be borrowing knowledge from some experts, and they're listing the experts here. There's plenty of others you can follow on YouTube, Medium or Twitter, but these are some of my preferred analysts. The overall sentiment is that we should expect something big to come in the next couple of weeks. There's an array of factors which contribute to their stance, and I too believe most are logical and corroborate our previous analysis of seasonality and people's interest in points 1 and 2. For the past few weeks, volatility has been at its lowest since 2016. That means price swings are very unlikely to happen as long as volume stays low. Not quite, but let's continue reading here. Although you might think the outlook is that of a bearish market, one thing we need to understand is that tipping points happen whenever you're not expecting them. Currently, Bitcoin is clearly oversold. The fact there's not much interest in trading Bitcoin also means price swings are very unlikely to happen. Both factors aligned with people not being interested in Bitcoin shows a very pessimist view. However, this was the exact outlook of the cryptocurrency market immediately before every major bull run. Now, to enter a proper bull run, a few checkboxes need ticking, as our dear experts point out. Number 1. Fresh cash must enter the market through exchanges, exponentially increasing volume. So yeah, it has to happen on exchanges so we can actually see it's happening. With a proper increase in volume, short sellers will go bust, increasing the short-term price of Bitcoin. Bitcoin needs to break out and annihilate the current price wall sitting around the $8,000 level. The 100-day moving average needs to surpass the 200-day one, and the 50-day moving average needs to surpass the 100-day one. So these are the 5 elements that, according to his analysis, we need to enter a bull market. We can obviously infer that a price increase will lead people to regain interest in Bitcoin and start purchasing again due to FOMO. His conclusion here. if a bull run is about to come, that will be a great indicator of the current Bitcoin seasonality, which may soon be gone as the more cash enters the cryptocurrency market, the less impact one single dollar has on the overall price. Meaning the higher the overall volume and the more distributed it is, the less likely manipulation of prices is to happen, making it a more stable medium of exchange. Is the bullish season open for business? No one really knows. Looking at different indicators seems to point in that direction. The only thing we ought to do is wait patiently and see. I can get fully behind that. And then it's just some more information. Now, I don't agree with everything he's saying in this article. But I think the core points he brings up here, that we have seen seasonality, that we have seen correlations to interest, and that there is a good reason to believe that a big move is about to happen, are valid. Now, I think it's a bit too optimistic to just outright claim that it's looking bullish. I think what we can tell right now is that some kind of big movement is brewing, and we just need one big piece of news to set it off. But we have no guarantee that that is to the up. It does look like there's a very good chance Bitcoin might have reached a bottom at around 6,000, slightly below that. That might be a permanent bottom, but we do have to keep in mind we might break under that and what will happen then. I am personally hopeful. I am optimistic. I don't know if we will see another bull run this year. Looking at the last couple of years, it does seem likely. I'm not quite sure we've established the underlying reasons why that always seems to happen in winter. Someone else might have very well analyzed that. But I'm generally hopeful here. I wanted to share this perspective with you, with a perspective that actually provides some deeper reasoning, because most people are basing their predictions on just one or two factors. I think we always need to look at a fuller picture than that. But looking at just how much volatility has gone down and at historical trends, I think we can expect something big to happen in the near future. If that will be a price explosion like we've never seen before, that is to be seen. Anyway, we're 17 minutes in and we haven't even talked about news yet. We've only talked about opinions and analysis. So let's get started. There wasn't all that much news today, but some of the stuff we have gotten is intriguing. First up, the president of the World Bank is talking about the potential of distributed ledger technology, which of course underlies blockchain and all cryptocurrencies in some way or another. Let us read this. The president of the World Bank Group, Jim Yong Kim, probably mispronounced that, I'm very sorry, has stated that distributed ledger technology has huge potential and that the bank should keep pace with innovative technologies. Kim spoke at the International Monetary Fund and the World Bank's annual meeting in Bali on October 11th. Kim addressed the importance of fighting poverty while boosting prosperity, those are kind of the same thing, pointing out that there are innovations in the technological world that can help us leapfrog generations of bad practice, generations that would take forever in terms of reducing corruption. And he said, "We talked about cryptocurrencies, but we think distributed ledger has huge potential, and we issued the first blockchain bond in August, where we created, allocated, transferred, and managed the entire bond through blockchain technology." Kim further noted that the deployment of blockchain helped the group reduce paperwork and costs, adding that it is something that can be extremely helpful in the future. He admitted, however, that the bank has not been keeping up with all the latest developments, particularly in a way that would help their customers take advantage of the great things that are coming out. According to Kim, the World Bank's goal is to develop universal access to financial services by 2020, which in his opinion will not happen without deeper engagement with the technology world. Now, I'm not sure how aware a lot of my audience is about the financial situation in much of the world. If you're not living in a developed nation, for instance, if you're living in some parts of Africa, South America, or Asia, there are large parts of the population who are not connected to the traditional banking system, who are not connected to any financial services, who often do not have bank accounts. So cryptocurrency is seen as one potential way to solve that issue, to get everyone into global finance. As previously reported, the World Bank and the Commonwealth Bank of Australia issued a public bond exclusively on a blockchain. The $73 million deal entails 2-year bonds that reportedly settled August 28th and have been priced to yield a 2.251% return. Following the positive results of the blockchain platform, Aruma Ote, I probably also mispronounced that, a treasurer at the World Bank, stated that the bank will continue to seek ways to leverage emerging technologies to make capital markets more secure and efficient. Notably, the World Bank president has previously expressed criticisms towards digital currencies. Speaking with CNBC in October last year, Kim shared his bullish views about blockchain technology while noting the risks of blockchain derivatives like Bitcoin. He stated then, "Blockchain technology is something that everyone is excited about, but we have to remember that Bitcoin is one of the very few instances of blockchain's use in currency. And the other times when blockchain was used, they were basically Ponzi schemes, so it's very important that if we go forward with it, we're sure that it's not going to be used to exploit." Now, this is once again, as we see often with traditional finance people, a statement with some kernels of truth in it, but taken to a bit of a conclusion that isn't necessarily true. Now, it's a bit misleading to say that most instances of blockchain's use for technology, except for Bitcoin, have been glorified Ponzi schemes. There have definitely been scams. There have been coins that were only created to pump and dump to make the creator money. But there are also various legitimate projects with real companies backing them, with a lot of top engineers working on their technology, who are creating distributed ledger technology solutions with tokens on them that have a host of applications. So I think he's exaggerating a bit, but it does make sense that people are a bit scared seeing how much stuff that really shouldn't be going on is unfortunately still going on in the crypto world. But I think these views will change over time, especially as people are getting more into it. And if people are seeing the power in blockchain, that is very good. Now, he is of course a hugely influential person in the financial world, and anyone who speaks at the IMF and the World Bank's annual meeting has influence, so this is very good to hear. Next up, some Ethereum news. Constantinople is happening soon, and we have more information on why. Constantinople, of course, is the next major update. Open source coders backing the Ethereum project now say its next system-wide upgrade, Constantinople, is on track for November release. Revealed in a bi-weekly developers meeting Friday, attendees said the upgrade has already been coded into all major Ethereum clients, including those by the Ethereum Foundation and UK startup Parity, the most popular versions of the software that now moves more than $20 billion in cryptocurrency. As such, developers said during the call that the upgrade is likely to go live this year. Still, a hard date has yet to be finalized in which an activation time triggered at a particular block would be built into the code. As previously reported by CoinDesk, Constantinople includes 5 backward incompatible changes to the network, ranging from minor code optimizations to more controversial changes, such as that of a reduction in mining rewards for each block of transactions. Still, tentative plans to release the upgrade hinge on a smooth release of the Constantinople upgrade onto an Ethereum testnet called Dopson, the primary platform for testing new code, a development scheduled to occur this Sunday. Last week, the test release was delayed due to a bug found within one of Constantinople's 5 changes. During today's developers meeting, however, several Ethereum software clients affirmed that they were largely ready to move ahead with testing. The core developers are excited about the upcoming testnet release of Constantinople. Hudson Jameson, a communications officer for the Ethereum Foundation, told CoinDesk in a statement following the call. He added, "We are on the right track to hopefully release Constantinople on mainnet less than 1 month after DevCon." So that is looking pretty hopeful. There has been a lot of uncertainty around what is happening in Ethereum's near future and when updates are happening, and it's good to see them solidify more of this. This should happen very soon then, and it's good that they caught the bug early. Ethereum, of course, has to delay the difficulty bomb, and I believe Constantinople is a part of the plan for that. I'm actually not entirely sure right now. But seeing that the update is moving forward is very good to see. With it appearing on the testnet tomorrow, we should have more information on if everything is running smoothly very soon. And last but not least, some negative news outside of South Korea, though you could argue that it isn't really news at all because it's no change in stance. South Korean financial regulator reaffirms negative stance on ICOs and crypto. Now, South Korea is of course one of the biggest crypto markets, but very negative regulatory space for ICOs. So let us look at what they are saying here. The chairman of Korea's Financial Services Commission, Choi Jong-ko, I probably also mispronounced that, once again very sorry, I don't speak Korean, has reaffirmed his negative position on digital currencies and initial coin offerings, Business Korea reported October 11th. Choi spoke at a parliamentary audit session of the commission held at the National Assembly. South Korea prohibited ICOs in September last year, stating that such a type of fundraising is almost a gamble. This August, Korean lawmakers, including participants from government ministries, returned to the cryptocurrency issue, focusing on repealing the country's ICO ban. Lawmakers agreed on the need to develop a related policy before carrying a resolution on ICO re-allowance. At the recent session, Choi reportedly said that the government does not deny the potential of the blockchain industry, while noting that it should not equate the cryptocurrency trading business with the blockchain industry. Choi said, "Many people say the Korean government should allow ICOs, but ICOs bring uncertainty and the damage they can cause is too serious and obvious. For these reasons, many foreign countries ban ICOs or are conservative towards them." Choi also addressed criticisms of commercial banks that refuse service to crypto exchanges, stating that exchanges should be able to persuade banks to issue bank accounts to them. That is a bit of a cop-out. Like, your bank should provide bank accounts to anyone. You shouldn't need to persuade a bank to allow you to have a bank account there. Other officials have said that the South Korean government is likely to announce its official position on ICOs in November. The chief of the Office for Government Policy Coordination, Hong Nam-ki, probably also mispronounced, once again sorry, said that the government will announce its position once it finalizes its discussion and receives the results of a government survey. Hong told Korean business publication The Investor that the government launched a survey of blockchain companies to gather their views on the current legal framework. In September, South Korean cabinet ministers agreed to exclude all sale and brokerage of digital assets based on blockchain technology from venture business classification. The move was reportedly taken in order to strengthen the cooperation of related institutions and to protect citizens from the illegal activities related to the digital assets business. Now, I'm very disappointed that South Korea continues to be so negative about crypto. I think instead of just disallowing everything, they should be working on regulation that cuts down on misuse of ICOs and of misuse of blockchain technology. They should be fighting scams, not fighting the entire system. So I'm very disappointed in this. We have seen some signs that stance might change in the future, but this is looking like for the near future it will remain the same. So I'm a bit disappointed in this. Anyway, with this, I'm going to end today's video, and it got longer than I wanted it to be once again. As always, thanks for watching, and make sure to subscribe if you want to get these videos every day. I do try to get them out every single day. If you look down in the description, you will find links to all these articles, as well as my social media links, ways to support this channel, including a Patreon now. Special thanks once again to my Patreon supporters. Those are the best people in the whole world. And there's also an email address where you can ask me questions for a potential future question and answer video. And yeah, thanks as always for watching, and I'll talk to you guys soon.